All right. Hey, everyone. Douglas here, and welcome back to the MMT Macro Trader. Welcome, everybody. Going live from the Northern Command for the first time in live stream history. Hopefully, everything's turning out all right. I have been scurrying to get the setup good to go. Chat, let me know if you can hear me. I might be a little off tonight. It's a whole new setup for me, but we're live, baby. We're back for another hopefully fun week of all things MMT. Bijou, how you doing, my man? Everybody, let me know in chat too if you can hear me. And make sure we're all coming in. Let me make sure, heard. Yeah, make sure everyone can hear Bijou.
Let me unmute the YouTube.
I think we are.
Oh, yep, you're good. I can hear you.
Perfect. I think we're good to go. Bijou, how you doing, man?
It's not in stereo. It's a delay as usual. Good, thanks. How are you? It looks like you got a nasty case of sunburn there. Hope you've put the cream on.
I think you know. You know what, the normal light setup that I have is not here, so my skin looks a little probably.
Blame it on the lighting. Or you fell asleep on the beach with
no.
beer.
Listen.
MMT book in your lap that you only got to the 6th page of. Yeah. Tell us the story. It's all the lighting. No, it's only the lighting.
I sincerely am a stickler for sunscreen and all that sort of stuff. 50 SPF right away when I get out there.
Sensitive white skin.
I burn. Very sensitive.
Burn or freckle? Do you burn or freckle?
Fry. I fry. Red. I mean, red would be the color. If
you
that
fry.
Was the case. Yeah. I fry.
Yikes.
I fry. So the
Good
plan.
To see you, though.
Yeah. So the plan tonight, guys, I had it all set up. It's awesome. We the beach house it's like right on Lake Michigan, and tonight was going to be live. They put Wi-Fi in. We had Wi-Fi in the beach house, and I was like the sunsets. We sit on a bay. The sunsets at this time of the year effectively cuts the bay in half. Beautiful. It was going to be an awesome setup. It's raining out. It's going to start raining out any minute now. So. Kind of sucks, but maybe we'll come back later this summer and set that up. But anyway, I'm excited to be back, man, because people are starting to come around to the fact that something wasn't right. No one's willing to actually say it out loud, but the recession calls, we don't know where they've gone. We don't know, where have all the Cowboys gone? Where have all the recession calls gone? Because they are. They're nowhere to be found, Bijou. They're nowhere to be found. We gotta find the recession.
No, I know. Where are they? We gotta find this recession. Damn,
we gotta find
over there. Take it out of the data. Although I got some new things to help me with that.
What's that?
I've got this tool, right? I open up WhatsApp. Do you know WhatsApp, this messaging app?
Yeah. I'm familiar with it.
Yeah, just the private messaging. Yeah. So I pop up, I open WhatsApp, and then suddenly this new large language model appears called Ryan Benincasa.
Oh my, yeah.
And it's amazing. It's amazing.
He is.
Like it's advanced. It's like I don't even prompt it. I don't even prompt this dude, right? This Ryan bot. It's like I just send a happy face or a thumbs up or something, and between a minute or 6 hours is it's a bit of a issue with timing there. Obviously, it's so advanced AI. It goes to sleep, and then it kind of wakes up, and it has some thoughts, and it spits out this sort of mini thesis. No prompting. I mean, I just tell a few jokes, and whoa. It's pretty awesome.
All right, so I gotta tell you something. I gotta tell everybody something. Ryan from over at Applied MMT. If you're not following them on YouTube, if you're not wherever you get your podcast from, if you're not following them on it's Adam and Ryan run the Twitter account together, and they run the Applied MMT podcast together. If you're not following them, you need to follow them now. I don't want to give away too much, but Ryan and I mean, I'll let him drop the bomb when it needs to be dropped. But Ryan and I had a really good phone call, a good chat. I don't even know what today is. What's today? Tuesday, Wednesday. Today's Wednesday. Of course, it's Wednesday. It's live stream Wednesday. We had a really good chat. I think on Friday or Saturday. I don't know when we talked. We had a really good chat, and he's like, Doug, I think I might be onto something, and I'm curious if the data is there to support what I'm onto. And I'm like, all right, let's take a look. It was intriguing. And one of the things that I have never done, and again, this is the extent of, I'll let him kind of divulge when he's ready to divulge this, but I'll divulge at least this much. He's like, hey, I think using some MMT understanding, not only can you understand where the stock market is going, clearly we've proven that, right, over the last year or so, but I also think you can start to figure out individual names. And I'm like, all right, you've got me listening. And so we spent, I don't know, an hour and a half going over some various data points, and his instincts, like he has a very deep understanding of MMT. He has a very deep understanding of banking, and he has a very deep understanding of why some companies win and why some companies lose. And we chatted for a while, and I think he's onto something. So I don't know when he's ready to share, what he wants to share, whatever. But like the immediate poll, the little, the little work we did right then and there, I think he's onto something. So if you're not following the Applied MMT crew, you got to be following them. And they come off as smart, but he's got some insights. They've got some insights that I have yet to hear from anyone else. And it's pretty spectacular. I'm excited I'm excited to be chatting.
It's wild.
With him. Yeah. They've got some good stuff. I wish I could share, but it's his insights. So I'll let him take the lead. But Applied MMT, check those guys out, Ryan, and they've been on. We got into a little chat group with him, and he's been on a roll, man. He's been on a roll. He too can't find the recession. He went looking for it, but he can't find the recession. So.
He couldn't look for it. Yeah. Someone's got the raps on that. I know. Yeah, he's just got to send us some good links to have a look at. Oh, I haven't yet looked at them all, but more stuff to do. I haven't actually had a very, very happy week. It's been a few annoying things come up, so I've got a bit of a backlog of
like
things to read and
life stuff coming up, or
and do and handle. No, just sort of bit of work.
Okay.
Other things to do, chores to do. TGA tables to try and sum up. I sum up the columns, right?
Yeah.
And it's like I'm off by 2 or 4, and I'm thinking, and it's initially it's like, 2 or 4, no worries, and then it's like, but that's millions. So it's like, what?
Yeah. If something's not exactly right.
So procrastinated a bit on that because it's no fun to sum things up, and you're missing a few million. Anyway, nothing to talk about because it's not MMT related annoyances, just other annoyances. Yeah. Anyway, back to you. I was going to say though, you're on vacation, but the beard hasn't grown. So when does your beard grow? Is it stuck it permanently at 5 millimeters?
It is. That is exactly.
When are you going to grow that beard into a real Chad?
a real man beard. Yeah, this is
real man.
Yeah, this is about as long as it's going to get at this point.
As long as it gets?
Yeah. No, it can. I can
stop there and go,
I can grow a full
enough
beard.
Nutrients. I'll stop growing.
I can grow a full beard. I'm quite capable, but
prove it. Do it now.
I have nothing to prove. I have nothing to prove, man. No, I took everything. I mean, it all. It's one trimmer. The whole thing. It gets it. It gets it done. Let's see. Michael, welcome. Charles, welcome back, my man. Danger Zone, welcome back. Talking about.
It's going to rain there, but you're in a T. Is it raining but warm where you are? There?
It was 90. Yeah, it's 90 degrees. It'll be nice tomorrow. It was 90 degrees today. Yeah, it was. Also, I wanted to let everyone know too that it's a leisure time, I guess, and I wanted to make sure that was understood.
Yeah.
If it gets cool, I've got a top right here. Also, one of my reply guys, the real macro econ guy called me a small guy.
Real macro econ guy.
He called me a small guy.
Ooh.
A small guy on Twitter. That got me a little. It got me a little.
I wouldn't do that.
Yeah, no. I mean, geez, Pete's, man. I'm almost.
You've only got one supercomputer.
6'2". So. I'm almost 6'2", 200 pounds of pure muscle.
Oh yeah.
So.
Oh, okay.
And he's on YouTube.
I thought he was talking about portfolio.
He's a little man, and he's calling me small. I've seen him on YouTube. He's not like a man like I am. He called me small. It hurt my feelings.
Interesting
clearly.
line of attack.
Yeah. Yeah. Let's see. I just said hi to Danger.
Is he measured?
What's that?
Yeah.
I was gonna say too.
Nothing. I was just thinking, does he measure people by the size of their portfolio or their
must
chat?
be,
Maybe?
must be. That's obviously what he had to have mean, because he couldn't have meant
like
he couldn't have meant my stature, but that's what I took it as.
Stature.
Yeah. Echo Skeleton. I think I've seen you in the past, man. But welcome back, Eugenio. Welcome back, my man. Josh, also welcome back. Glad to see everybody in chat. I do have some things that I want to cover. Some good questions that have come up in recent YouTube videos. I want to kind of discuss the YouTube video that I posted earlier this week in a little bit more detail, because it generated some good conversations. I do have that. I don't know. I mean, Bijou, if there's anything you want to get into right away, we can certainly do that.
No.
Okay.
Like I said, I kind of half got into a few things. I got an old interview on Odd Lots podcast with that guy Zoltan Pozar and Perry Merling in a sort of debate.
Okay.
Kind of interesting. Looked like, it was some stuff about international currencies and going back to a commodity-based currency. So I thought, holy shit, this is going to be fun, but in a depressing way to listen to. So, but that's all to look forward to. So I'm not going to kind of spout on about that tonight, because otherwise I'll just be talking out of ignorance. I was just like, I got some red light warnings, and then I had to do some other work, so I didn't get to listen to all of that. So maybe do that next week.
Okay.
I did though come across this really interesting guy. So while you're collecting your thoughts on your
go for it. I gotta check something.
This one thing.
Yeah.
It's an easy one. Maybe I'll put it in the chat too. So I came across this guy, Dr. William Glenn. That's just with one N. And he was talking about paradigm shifts, mainly in science. And so he was updating Thomas Kuhn. Now, I don't know if anyone here knows Thomas Kuhn, or maybe you've heard of him but haven't read the book. I think I've got Kuhn's book somewhere. I didn't pull it up on my screen today, but I'm not sure Kuhn actually studied real-time sort of paradigm shifts. So this guy, William Glenn, he decided to study paradigm shifts in real time. He first did the tectonic plates, the whole geological paradigm shift of, continental tectonic plates, which was completely dismissed, in the early days when this guy in the 1930s or whatever came up with it. Bit of a sort of a genius, but he was totally ignored and rubbished and poo-pooed and all that. Mm-hmm. But that was all over.
I don't know what that's like at all, by the way. I don't know what that's all at all. Yeah, that's,
yeah, we don't.
No, that's just nothing that's ever entered our world.
Like, but you just got my point, right? You just got the punchline. But so that was done before he was doing his work. I think he matured in academia in the 80s, 70s, or 80s or something. But he decided, can he look around and find a paradigm shift that's taking place right now? And there was a big one, and it was sort of in that area that he had built some expertise in. He's a historian of science, which was the who killed the dinosaurs? Who killed the dinosaurs debate. When we were growing up, when I was a kid, I mean, I had no idea really, but this was actually a huge debate in paleontology, and then the physicists came in. But this was back in the 60s. The physicist Louis Alvarez and his son realized the iridium layer in the record in the paleontological record at the KT boundary was couldn't be explained by volcanoes, which was the dominant theory at the time, and had to be a meteor or asteroid, Eric.
Yeah.
But no one saw this crater at that time or in the geological record. It took like decades before the Chicxulub massive crater was found, from that Mexican peninsula there. And that was like a huge find. But before that, it was such a big debate. And the paradigm shifting thing had all of the characteristics of the classic, Kuhnian type of thing. Ptolemaic to Copernicus, and neoclassical monetarist Austrian to MMT shift. All of characteristics of those shifts, where the old guard, it's not that they can't learn or they're not intelligent. It's just that, I mean, they may be.
No, some of them might be incapable.
Every individual taken on their merit. Sometimes they're just idiots. But in the science, in the geology and the dinosaur thing, it was like, yeah, but these paleontologists, they can't give up their whole sort of gradualism. The evolutionary biologists, can't give up gradualism. They don't appreciate that you can have these extinction events that are just sudden occurrences. They had this gradualist bias, which was from the 19th century geology and biology. And these catastrophists sort of came along and said, oh, no, maybe this was just one massive event that disrupted things. And anyway, the old guard, it's not always that they're stupid. It's just that they just do not want to give up their favorite sort of theory. They're just so invested in it. Careers are on the line, reputations. It takes a very rare, quite brave individual from the prevailing paradigm camp to sort of break ranks and sort of start the floodgates opening for the new paradigm. And obviously, there's plenty of cases in science where someone new comes along with a new idea and it's just completely wrong, and just gets ignored and dismissed as it should be. But these actual paradigm shifts that take place and that do take place, they take a long time because the old guard just dig in, and they've got all the everything, all the past literature, all kind of backs their theory. So they can always quote literature and whatever. Does it sound familiar to anyone here?
Yeah.
Sound familiar? Yeah. Warren Mosler, the crank, the guy with this crazy theory. It's obviously wrong. Massive waves of mainstream digging in the heels and egos and resistance. And the guy Glenn, that video I just sent popped in the chat there. It's quite a good one where he's talking about all of this. And the whole interview, I'm thinking, oh, this is fascinating because I'm like any young kid, sort of kind of like the dinosaur stuff. At least for a while, I had my dinosaur phase, when it was kind of cool to look at these sort of creatures that you could imagine could have been almost like dragons or something. Quite exotic stuff.
Yeah.
And it was interesting to go back over all of that because I'd read about it from Stephen Jay Gould and all that before, and it was always kind of interesting to a physicist to have the physicists sort of crack open the case for the geologists and the paleontologists and that. It's just a kind of little twist on it that the physicist was the guy that discovered it. It's a kind of a cool thing for a physicist. But the general idea is actually very interesting history, very interesting sociology of science and
how it all played out.
So I reckon like one of these other things that this large language model called Ryan Benincasa sort of just randomly unprompted on WhatsApp, sort of generated for me was what did he do now? What did he send us?
Well, a lot of stuff. I haven't been able to catch up with a lot of stuff, but
Isabella Weber. He said this. He unprompted. He just wrote this thing about Isabella Weber and her views and how she was saying that there's a massive space, a wide space open for heterodox economics, and Ryan. I think Ryan was joking that he could sort of retrain. It wouldn't be much of a retraining for him, but just change career and become a heterodox economist and sort of do some of this work. And I tell you, this is one area where it would be quite fascinating. It'd be quite a career to build, to be the person studying history in real time, which I reckon Ryan's really good at. He was spitting out these theses after theses. Doing real time historical work on the MMT paradigm shift. It's like so much already out there. It just kind of almost just needs to be collated. You got so much quotes. You got so much stuff out on the social media. Most of the journal access you can get would be probably free at the moment. You don't have to always subscribe to these journals. You can get a lot of stuff from the servers. Oh man, I mean, just like it's just like if I was inclined to be an historian, I'd be doing MMT paradigm shift and like
Real time.
just the best thing to do. It's just like, oh my god, there's just so much to write about, and it'd be so fascinating. So anyway, I hope someone does it. Maybe someone already is. I don't know, but yeah.
It's kind of wild too. Just the last 3 years in terms of what we've been able to learn about macroeconomics, about the implications of fiscal, about the implications of monetary policy, and how they actually play out in real time. This was kind of part of the video I posted earlier this week, and how I led off the intro to the most recent update over on the Patreon MMT Macro Trader for the subscribers. And it's just that we have hit so many unprecedented tests. I mean, if there weren't humans involved and you could run a monetary and fiscal test on a nation of 300 million people or on a nation of 100 million people or whatever, right? I mean, just, massive centers of population and global policy, and you could just, run a test and see how this thing plays out. The last 3 years has absolutely been that. And it's only continuing to occur because of what the Federal Reserve has done. And I think this took a lot of people off, and there's some things I took them up, like kind of tripped them up in their thinking. I want to go over some of this as well in more detail. But normally, okay, so there is very clearly I'm just going to call it an endogenous cycle. So there's this it's the bank credit cycle, right? It's the Steve Keen, Ty Keen's cycle. It's like 18 months to 2 years. It's 18 months to
euphoria, expectations.
Yeah.
A lot of lending going on, and then the need to repay.
Yes. So there's this cycle, and it has mini cycles inside the cycle, and there's like a 18-month to 2 year cycle, and there's a larger 10-year, maybe 10 to 15 year cycle, right? So I mean, there's these cycles. Obviously, certain things come up, and the cycle does its thing, and I mean, I'm not trying to say it can be perfectly timed, purely cyclically. Just due to a calendar, but you get what I'm saying, right? And it has the parameters that make this thing happen, right? Usually happens. I mean, going back.
Well, if you show me the data, if you have some time series that you would say characterize that cycle, I'd be interested. Can you send it to me? Because I'll just do a quick Fourier analysis on it.
I would be interested. That probably would be a bad idea.
Maybe 2 or 3 frequencies. That'd be cool.
I think the best thing to do that would be on the margin debt data. I think that would probably. I mean, it's probably the most honest data to be honest. Especially when it relates to markets. Because this will get on to another point too that I think I still need some thinking through. But so you have this bank cycle, and the banking cycle is not entirely independent from the fiscal cycle, but it's got its own inputs and its own life to it, right? So usually how it plays out, especially since 2000, or maybe even before 2000, is you'd have for the sake. I'm not saying it has to be 2 years. I'm just saying for the sake of the argument, I'm going to call the banking cycle 2 years, right? Just understand that every 2 years you have a bit of a pop. Every 2 years, and then subsequently it goes into a bit of drop. It doesn't mean you have to get a recession. Right. A recession cycle might last every 10 years, right? But I'm just saying, right? You get these aren't exact numbers. Obviously, there's a lot of circumstances that can change the path here. You get what I'm saying, right? So there's a 2 year kind of mini. Okay, so starting in the late '90s, you had the big expansion, the big credit expansion, the biggest one we've seen since the Great, prior to the Great Depression, right? And during that time, right? Let's even go back to the late '90s, right? We had the brief recession going back to the late '90s. Following the late '90s, you had the automatic stabilizers kick in, big boost in government spending, and that big boost does a couple things. One, it stabilizes the downfall in the economy. It stops the unemployment from taking off, right? It stabilizes things. And then eventually what happens is that fresh fiscal capital finds its way into the banking system, recapitalizes the banking system, increases the income of the citizens, and the banking cycle is now able to take off again, right? And my point here, and this is kind of the point I was trying to make during the little thing that I posted, is what ends up happening is the fiscal begins to slow down, right? Not as many people on unemployment, right? Some of the benefits, some of the automatic stabilizers begin to level out. The Federal Reserve, here's the key. The Federal Reserve then comes in. I realize I'm sitting a lot closer to the camera than normal. Sorry if I'm really leaning in here, chat. Federal Reserve comes in. The Federal Reserve comes in, and they drop the interest rate to zero, right? Following the prior recession in 92, right? What does that do? That actually takes away, that begins to take away the fiscal at that point, right? But the fiscal from the automatic stabilizers is more than enough to resupport the economy at this point. And then you go through the gradual climb. The banking sector starts to do its thing. The fiscal side starts to fall off, but don't worry, the banking sector is there to help right out, right? It's now going to carry the growth. And now you get into the 2000, and obviously there was a massive surplus on the fiscal side and a massive deficit on the private side. And so you get this, big expansion. There's no fiscal there, and then you get the debt deflation dynamics to essentially take hold. Right now, we're all we're all held ransom by the debt deflation dynamics unless the fiscal side kicks in, and they don't. It's not going to until you get runaway unemployment. And I did, Ty. Welcome. I did. I got that. But anyway, we hit a recessionary bust. The debt deflation dynamics kick in. Unemployment gets spiking, and then the cycle repeats. And we see this, in 2000. I hope this is making sense. We see this again, we see this in 2000. We see it play out again in 2008, and then we almost see it play out again in 2015-ish, and then COVID hits, right? So you see the cycle play out over and over again, and then COVID hits, and the cycle doesn't play out the same way this time. And this is why it is so different, and it's so, I don't know what the word is that I'm looking for. I mean, unprecedented is what I used on the thumbnail, but this time, the fiscal, we essentially, here's the thing, and I'll kind of admit it, but we had a fiscal recession, right? We had a surplus in real terms. In fact, a surplus in terms of the actual level as high as we did heading into the dot-com bust, right? Now, it was very short-lived, and we still had the massive kind of hangover, we'll call it, from the fiscal spending post-COVID. But we had, in terms of rate of change, a massive fiscal drop-off.
Yeah.
And we kind of had a bank drop-off in 2022 as well. But the big difference this time was the Fed never put rates to zero. In fact, they were hiking rates. And this is what was so cool. And this is what's so cool. And going back to your point about, the history of things, the Fed added additional interest income. They added to fiscal spending when normally the fiscal would be drifting away. Yeah. And we would be left on the
They're only supposed to do monetary. Someone tell them.
Yeah. They got on the fiscal. Yeah, this is our, yeah. Oh my God! So you can almost say
their policy decisions forcing Treasury Congress to do fiscal.
They finally are printing money. They finally are. The Fed is finally printing money.
Yeah.
So.
Jeez.
So that finally happens, and now here's the kicker: we certainly saw a bit of a bust on the banking side too. I mean, we saw the bank flows fall off in 2022, and now the bank cycle is starting to just barely accelerate. Where it's really accelerating is at the point of speculation. That's where we're really starting to see it accelerate. What I'm curious to see is when we finally, this is kind of my hypothesis here. I think what we're going to start to see is things like personal credit really start to accelerate, right? Because my guess is, obviously the wealthy don't need to go into debt right now. They're getting their fair share. Right? The top 50% is getting their fair share of interest income, without risk. Yeah. But it's going to continue to squeeze, right? And we've talked about this, right? It's going to squeeze first the bottom 1%, the bottom 5%, the bottom 10%, and it's just going to increase.
Yeah.
And they're the ones that are going to have to go into debt to support the savings need, right? That's essentially it, going into debt because they need more savings.
Yeah.
And so they're going to go into debt. The private sector is going to go into debt. We're going to get a credit boom, not like in the good way, but in the most regressive way, as we're also continuing with a fiscal boom. And I don't know where this ends. It is so spectacular that we've got ourselves in this situation. I have my ideas of where it's going to end, but we've never ran. The U.S. at least, the Western world has never ran this test before. We've never ran this test before, and we're about to find out. So that's what that video was about. And then some of the questions that came up, Bijou, I'll let you get a word in just a second, but some of the questions that came up, one was one that was on Twitter. And if you look at just bank credit is still, in terms of rate of change, is still essentially bottoming out here. But it's really important to measure acceleration, right? I kind of have a little proprietary measure for the acceleration function that I've found most effective. If you get creative, you'll find something that will work, that can kind of give you, kind of that leading indicator. But the other one that I think is really important, especially in terms of kind of the speculation side, is the margin debt, and that is undoubtedly accelerating at very quick pace here. And I think it's going to be very difficult too to see this kind of dual credit boom, because one of the things that happens is when the fiscal spending is so strong, the need at the macro level for credit to increase just isn't there, right? I mean, the savings desire is being met by the additional interest income, but it's at the macro level, but it's only being met for the wealthiest, for the top 50%, right? It's not being met for the bottom 50%. So unfortunately, there's not, the bifurcation of the classes isn't, captured in the various banking data we can get. So it'll be tough to see, but I think you're gonna have to look at some of the more speculative data, some of the data that's more closely aligned with kind of personal credit and that sort of thing, to really get the sense that that we're getting this credit expansion that you might not see when you take into consideration the whole macro scale. So that is my, I guess that's kind of my monologue, my intro, a little bit more kind of trying to elaborate on what I'm seeing and why I think we're in such an unprecedented situation, and why no one can find the damn recession. It's nowhere to be found.
Yeah. But I mean, I mean, the other thing is people have to eat to survive. So it's not like you said savings, but it's also just being able to eat.
Yeah. Well, I guess what I'm trying to say
taking
is
out their credit card to get groceries and that sort of thing.
The way that Moser says it, I'm forgetting the exact phrase that he uses, but it's escaping me. Maybe someone in chat knows the phrase I'm talking about. Fill me in, but go ahead though, Bijou.
Sure, what is it? But there's all the other indicators that were also interesting that I was watching a few people post on Twitter and so forth was construction and housing and all that sort of thing. So you'd expect people to, with higher rates, eventually people will stop taking out mortgages and start sort of just paying off that those debts. And so it's not necessarily savings driving a lot of things, but just the need to pay debt down will later catch up, I think. But that's all sort of before that actually spirals downwards into a sort of debt deflation. It can be sustained as long as there's fiscal coming from somewhere.
Exactly.
Right? So
exactly.
You cut off the fiscal taps, then that all dries up, because you're not going to get employed to post some trash junk mail pamphlets or whatever bullshit job you're having to do just because the money's there. So that's one way it could sort of get shut off if the fiscal side starts to shut off. But I don't have much to add to that apart from all those little nuances. But because you could always, what I'm thinking is you can always get the nerds pop in and point out, but here's some data that suggests we're in a recession. You can. I don't think you can't find a recession, but you can find people who think they can find a recession.
Yeah. Well, at least at least in the U.S., where you can find, where you can
one particular time series.
Yeah. Where you can find recession is in Europe. Someone, one of my reply guys was going on about that. Europe's in recession, and I'm like, what is different about Europe right now than the U.S.? Go look at the fiscal spending, and I'll show you. I'll show you exactly why they're in recession. I never got a response after that. So, look, obviously Europe doesn't have the fiscal political will. And you're seeing it out there too. I mean, you're seeing it in France. I'm not paying too much attention, but that looks terrible. That looks sad. Yeah, Eugenio, a technical recession. I have no problem admitting that 2022 came as close to as a recession as you can get without a recession. But at the end of the day, we never had runaway unemployment. And to me, you need some massive spike of kind of runaway unemployment to call it a recession, right? I mean, just a drop in growth,
Right.
without that actually affecting the livelihood of millions of people is not.
That's right.
You can't call that a recession. So, and we never got it. We never got it.
Semantic, yeah. I think we have a receipt. Like, if you go ahead.
I was going to say what's really funny actually is like, I mean, I look at no one can define what a recession is, but I bet like Ty Keynes and Steve Keen could come up with a pretty damn good mathematical definition of what a recession is, right? I mean, you could define the recession if you actually understood the dynamics at play in in a monetary system, with somehow like private debt, sort of definition, right? But obviously, when you live in a monetarist world, it's hard to define specifically what a recession is, because a recession is not always a recession in their mind. But we know it's really, I mean, it's a recession actually would be a contraction. You have to work on this definition, but it would be a contraction of the private debt cycle without additional fiscal support, right? I mean, that would be. Actually, it would probably be the definition, right? A contraction of the private debt side, with the government choosing not to support fiscally until unemployment kicked higher, right? So, I mean, in one sense, a recession would be a political choice. Political to make it a political choice, I guess, is what I'm trying to say. Is it a recession you could define as a political choice too, and that's how you define it that way. I'll stop. Sorry.
Oh yeah. On a floating fiat currency, you'd say it's almost political choice, but they don't know what they're doing. So is it a choice? It's like, it's consequences of political decisions. No one chooses unemployment. They just don't understand what causes it, and have a lot of things backwards. So it's political decisions. I'd say, to be fair, to be kind, rather than choices. Eventually, if everyone sort of groks or understands MMT, you could probably say it was a choice. But then, I just paradigm shift really
I get what you're saying.
I don't think they're going to choose it.
Yeah.
Not that they're not going to choose to have unemployment if they know that there's an alternative, which is to tolerate a bit of a cycle, maybe a bit of inflation, but as long as the lowest real wage is rising, you're good. You can always run full employment, and why wouldn't you? So you could banish that kind of definition of a recession from ever occurring. You can actually just eliminate it. It's remarkable, really remarkable. And you can have certain endogenous cycles, and so firms will go through periods of they're building up some profit, they're building up some retained earnings and that, and then they maybe go down a bit and draw on that to keep going, or whatever, sell off some of the stock piles and things, and then build them back up again. And you could go through those cycles, but in the macro, you don't have to have what we actually call a recession these days. It can be eliminated entirely. It's a remarkable thing, really, in economic history, and for this paradigm change. I did have something else to add to that.
Go for it.
Just escaped my mind though, but something. What were you just saying? I don't know. Maybe I'll just say it's escaped my mind. But I would just say that it's semantics. You can define recessions, I guess, how you like, and call it technical. But if you've got people at full employment, there is another version of a recession. I would say I wouldn't call it a recession. I'd call it something else. I'd call it I don't know. I'd call it class warfare, or exploitation of workers, or something like that. Which is that, and of course, no economists study this. You go like these libertarians, these neoclassicals. They all talk about, choice theory and welfare theory and all this. It's all just total bullshit. It's like people choose to be unemployed because they're just loving the fact that they're not working. Okay, but that kind of an angle, that kind of neoclassical libertarian type angle on things is pretty disgusting. But but it also hides another thing that you could call a recession, but I'll use a different word for it because it's important. I'd use class warfare or something like that, because the economists, they don't measure the anxiety, sheer freaking horrific anxiety of people, and it's only been. It's like there's a cycle of that. There's a cycle of anxiety, and that accompanies these bank and credit cycles.
Yeah.
There's also a slow growth in anxiety from the late 60s onwards through the neoliberal era, and it's just not going away. Just this base level of anxiety that just keeps on growing, and it comes through not only poor fiscal, but also the real economy with climate change and problems with energy and sourcing resources and soil depletion, mono agriculture and pollution, toxic runoffs, farming. I mean, in the past, New Zealand was this beautiful, pristine country, but we do so much farming nowadays that our rivers, like I can't swim in them. I used to when I was a kid, swim in our rivers, but these days it's like giardia and tourism is a big one. We don't need any tourism. I mean, just all these things build up this anxiety, which is not an economic measure at all. They're totally ignored.
Well, it seems like you're seeing it come out in Europe. I mean, it seems like you're seeing it come out in Europe, at France and whatnot. I mean, we're just getting these big,
France,
you're getting these big revolutions, almost, quasi-revolutions. I think that's the sad part about all
agitation.
I think that's the sad part about the situation. I mean, that we're kind of in right now as a whole is like the post-World War II liberalism,
needless anxiety.
The post-World War II liberalism that kind of emerged. That did. I mean, there was a lot of good that came out of that, right? I mean, there were institutions that came out of the post-World War II liberalism that were not bad institutions, and it's like those are the ones that are they're trying to come after, right? And it's like the institutions they want to replace are the institutions that are so aligned with authoritarianism and just so regressive in the way that they're going to be implemented. And it's just I think it's the sad part about it is the self-inflicted wound that is taking place right now unnecessarily. There is an answer, right? I mean, there is an answer that we don't all have to have the same political leaning and persuasion, but we can all get what we need out of this government endeavor. But it ain't gonna happen. It ain't gonna happen. I mean, that's the sad part about it, I guess. The end of Pax Americana. I've never heard of Pax Americana. I'll have to look that up. It's probably
Pax Americana. That's like the Rome. Think of Holy Roman Empire and all that sort of thing.
Okay.
The imperialist sort of.
Well,
single unipolar world power. The world's policeman, the world's justice court, and all that sort of joke. So, I think the end of that is good, but I'm not like these doom. I'm not like, the dollar's going to crash.
That's gold,
and all that sort of thing. I'm more actually the end of Pax Americana is a good thing. It actually may improve everyone's lives, including Americans.
Including the Americans, exactly. Yeah, exactly. Yeah.
I mean, geez.
Yeah.
When you just realize, actually we've been like spending on overseas military adventures and so forth, not investing enough domestically, but you still got a strong industrial economic base in the USA. It's not gonna go away. You could offshore a lot of factory production and all that, but then you import it back, and so it all sort of cycles around. The whole lot of injustices involved with all of that, because work and labor conditions and standards are just not so great in some of these other countries where you're getting stuff from. But but it's not going to be a bad thing if Americans have to pay a little bit more for their imports. It's like,
whoa, hold on.
Over time.
Now that you
yeah,
put it
yeah.
that way.
Sorry. I don't want to. Yeah. No. Next time your supercomputer is going to cost twice as much. But hopefully you'll have also twice the income. I don't know. But anyway, you trade and commerce and all that, they do find their own sort of price level parity levels if you allow them to.
Yeah.
If you don't have too many distortions, and you should tax your exports instead of slapping tariffs on your imports and so forth. And then it won't be that bad for Americans. Like, you're not going to become a third world country, for heaven's sake. So stop all this sort of panic about it, and just come over and understand MMT, and pressure your politicians to make to use their policy choices to do the right thing by everyone, not just Americans, but it'll be the right thing to do by the entire world, to reduce military expenditures and increase expenditures on sustainable energy and sustainable agriculture and all that sort of stuff, and jobs for all. Everyone can contribute, and the more people who contribute working, the less any particular one person has to work, for necessities. Still be people like you and me who just come up with all these, crazy models and things that no one ever needs, which we'll do for fun.
Wait a second.
Stop us doing it.
That no one needs? Is that what you just said?
What?
Everyone needs one.
No, I'm just doing my daily anti-advertising here. trying to keep all the emojis out of the chat. Trying to keep only the really cool people in our chat. Don't want anyone coming here actually learning new stuff. That'd actually be work for me, right? So yeah. So So man, there's interesting times ahead. But I think there's a small cycle paradigm change that'll happen when people just sort of realize, oh geez, things don't quite work out according to our models or our old understanding. But then there's going to be this like, oh yeah, but it was just COVID. COVID was sort of just messed things up.
I'm sure. I know. There will.
It was just an aberration. Yep. Things are back to monetarist normality now.
Yep.
Let's just forget this ever happened, and it'll go back to low rates and the normal, screw the working class and everything back to normal until the next time. So I think the actual MMT paradigm shift hasn't happened really, and I think it'll take another few. Sadly, I mean, how many millions of people died for this one, right? And as Josh, I think in the chat said, or Eugenio, it's been a sort of really good time for real-time historians of MMT to see all this stuff play out, but incredibly tragic way, right? Do we want another million or more people to die just to sort of, quote unquote, prove MMT? Of course not, but sometimes I'm half optimist, half pessimist, It's like, that was this other thing that I came across this week was the toxicity of optimism. So I noticed a few months ago, people in the chat might have been telling me that I'm a bit of an optimist. And, yes, I am, because I can see what MMT does, and I can see it's a ratchet. It's not one of these things that goes away. Living in our time right now, you can say, yes, people get introduced to MMT and to post-Keynesian economics and institutionalism, and then they just forget it. So there is this sort of short-term sort of pendulum thing where they get introduced to it, they think, oh yeah, that's cool, we can do this and this, we can have a job guarantee, we can have sensible policy, we can use the counter-cyclical automatic stabilizers, and then they just forget about it, if they're in media or wherever. So it's that short-run sort of loss of memory. But over time, MMT ratchets, because you get so-called, like true believers. I don't want to use religious terminology, but a paradigm shift kind of requires that. It's a lot like change from an old religion to a new religion. It's just or an old science like, pre-tectonic plates to the new science, or the old sort of gradualist dinosaur extinction because they were just not adapted to the asteroid impact theory. So there's that sort of the whole sort of changing of the guard. I don't like the religious terminology because these are all the same human psychological dynamics in all these cases. It's just the way people think, the way the egos work, the ways that the psychology works when you've got a sort of entrenched orthodoxy in any field. So I was listening to this thing on the toxicity of optimism, and it's like some people are so optimistic. I just shared something with Michael Cruz on this, on Steven Pinker and the New Enlightenment. It's pretty gross stuff. It's just actually a good one to watch. But I'll see if I can drop it in the chat later. But these new sort of what they call soft neoliberals are all about how all these things are declining, like the decline of war, the decline of poverty, and so on. And they forget, or ignoring, or I don't know, deliberately or not, a whole lot of relative state sort of dynamics. Like, if you open up the wealth gap, even though the poverty floor is shrinking, or whatever, the poverty level is like sort of rising. For millions of people, it's not. It's actually getting worse. And you've got increasing disparities of wealth and poverty, which is again, like I say, it's back to what I said earlier. It's something that economists and political scientists don't even sort of really measure much. The whole effect of the anxiety and the feeling of, just seeing these people appear with obscene wealth that no one in recorded history has ever accumulated. Just the social dynamics of that are just completely messed up. So it's good to have some pessimism as well about the future. You can have some optimism, like see where things are, but being one of these sort of bright-eyed neoliberals with your fairy tales of like, how the world is, constantly getting better and better, is a story, is a toxic optimistic story that you can tell, just using sort of statistics, just using averages, choosing your statistics nicely, and forgetting about the misery that people are suffering. And the most gross thing about all of that is that, well, from an MMT perspective, you realize that no one has to be poor. It's like, we can actually sort things out so that people do have reasonable purchasing power. And one other thing to add to that before I finish, which is just an interesting little illustrative point, is that just hang on, let me just get this.
I don't have a notebook. No, I'm gonna have to open up a notebook. Food poverty is an interesting one because you find that you can get malnutrition, undernourishment, and practically starvation, at least in terms of relative to you and me, in countries where there's abundance of food. So you know what that is, right? That's all the sort of monopolists and distributors and growers of food just sending food overseas in a country where it's got ample food to feed their own people, but their own people never get it, never see it, and all those sort of dynamics that are just due to monopoly, oligopoly, and the bad side of capitalism, the Karl Marx side of capitalism, where it's not about producing real goods, it's about just accumulating profit. So the story where you get money in order to produce something, but in order to make more money, and the end objective is just to make more money. There's the MCM cycle, which is the capitalism that Marx talks about. You shouldn't get confused with private entrepreneurs and so forth. It's the disgusting, gross side of things that all that whole pool of stuff I'm talking about is called to be extremely pessimistic. But in amongst that, if you're an MMT, I think you could also balance that with a little bit of
realist, sane optimism as well. Yeah, that's the story. That's what I had in my mind. So I think I'm done.
I might have a healthy bit of pessimism, but you know what I'm optimistic about? I'm optimistic about the MMT Macro Trader live stream. We've had some new names show up. If you've said hi before, I might just not have caught you. But Joshua Levy, man, welcome. Thanks for dropping in. Is it Damien's the Regicide? Welcome, man. I don't know if I've seen you yet either. So welcome, Roger Lucas. Thanks for dropping in. Shot. Zero Shot, welcome back, my man. Thanks for dropping in. Nick Gomez, too. Also, thanks for stopping by. I've seen you in chat. I haven't shouted you out yet, so thank you all for showing up. If you're just dropping in, I am at the Northern Command. We have a place up here on Lake Michigan. Usually, we usually end up going like leave Saturday and then stay for Monday and Tuesday, and we make it back. But took the whole week off, so we're here. And the plan tonight was to do the live stream on the beach. We put Wi-Fi in the little beach house that's down there, and it's raining. I mean, it's coming down. So it wasn't going to play out, but whatever. Hopefully sometime we can do that because it's pretty cool down there. We also had some questions in chat. Two things I want to hit on before we get to the question. No, one thing. One of the things you said is you had mentioned that people don't have to be poor, doesn't have to be poverty. We can figure that out. The one thing that I think is really important to stress specifically about MMT and the framework for analysis that is MMT is that you don't have to. When we say something like that, we don't mean redistribution of wealth. Right? We mean opening access as a policy decision to the real resources that the nation produces, right? So it's not about winners and losers. Losers, you just have to live without yours because you're not going to get the winners. There's still winners and losers, right? It's just that it's a policy decision to, I don't know how to say, I mean, it's a policy decision. It's kind of like, you go run a race, and if you lose, instead of just realizing that you lost, they're also going to kick you at the end while you're down. So it's that's the policy decision, is that it's just reinforcing the fact that I don't want to call it a bad decision. I mean, you're just putting people in a situation unnecessarily as a policy decision where they can't get access to the resources that country produces, the nation produces, or whatever the world produces. And that's unnecessary, and that's the big thing. It is a policy decision to do that. There's nothing inherent. I mean, don't get me wrong. We have a real resource constraint. That is undoubtedly the fact. And some of the things that even the Austrians would come up with isn't necessarily an invalid point. That we can't all have yachts. We can't all have private jets and that sort of thing. But that's right. But it's a marginalist fallacy, Douglas.
Okay. The marginalist fallacy that that in a quote unquote free market, get the government off our backs, blah
Big
blah
hammer.
blah.
Welcome.
The worker gets what they deserve.
It
has to be that way. So it's all about the worker's choice, not about the government's choice, which is completely disgusting and ignorant. And MMT is the only framework. I shouldn't joke about it. MMT really is the only framework that understands that currency is a monopoly of the government. And so if you've got a government that acts as if they need to get money off rich people, they're going to court and dine and wine and dine the rich people instead of the people who are actually producing the real goods that everyone consumes.
So that's a really good point. That's a really good point.
Again.
That's a really good point. That's a really good point.
Totally.
That's the whole thing about my wide, narrow, tall, short government idea, right? I mean, that is that's right. It's unfortunately what I don't think the Austrians understand is I guess the way I look at it, right, is you could call it kind of you'd have in my mind two kind of competing boxes, right? That might take up the space of the kind of social economic world that we all live in. And box number one is kind of the the government box, and box number 2 we might call the free enterprise box, whatever you want to call it, capitalist box, whatever you want to call it. I'm sure you could come up with a good definition here. But when you know what you want is, you obviously want free enterprise, right? I mean, the government's not going to know if you want an iPhone or Microsoft Zune or your Nokia phone, right? I mean, it's and the other thing too is, you're going to need 10 companies.
If we centralize and vote by committee on what goods we want to produce, it's going to be
highly inefficient. Highly inefficient. Yeah.
It's not going to be terrible, but people don't like that, right?
Correct.
People like having a little bit more choice.
Yeah.
But you got to recognize the currency is a government monopoly, and so the government makes decisions about who gets what. It's not all market dynamics. Market dynamics, determine relative prices. What you want to do is make those relative prices for things that are really cool. Not a lot of junk and crap that gets sold these days, like Bitcoin and crypto and what have you. There's all sorts of junk out there, right? And
So the point I was going to make is you have the government box, and the Austrians would want this thing in terms of height as short as possible, right? So when you shrink this thing, you shrink this thing down, free market enterprise, free markets. All right, go ahead. I'll go ahead.
They're not quite with us. I don't think, Douglas. I think the Austrians would mostly want the box to be short and.
Well, no, that's the next step. Let me get there. I'll get there. Right?
They want to tiny.
I know. I understand. I understand.
Laser beams like an army.
I understand. I understand. Yeah. So they want it as short as possible, right? In the sense, and I think by that measurement, as short as possible, I think they would see that as little government spending and interference in the marketplace as possible.
Right.
But then they also want it as narrow as possible, right? Now
that's right.
What ends up happening is, if you have it that way, both narrow and short, if government begins to grow at all, because it's constrained on a narrow axis, what you end up getting is not more democracy where more people have a say in the government and the decisions the government makes. It's that fewer people end up having that decision. And like you were saying, the point that's being made earlier is that what ends up happening is you get only the wealthy who have a say in government. And then government works for nobody.
Yeah,
right?
Feudalism.
Yeah, the government ends up working.
Yeah, pretty much.
Government ends up working.
You get concentration of power. Yeah. You can't have a pure market system without concentration of power, because once it's rich gets richer, poor get poorer effects. It's just the way power works, the way those dynamics work. And so the way that human beings, its cultural civilization have sort of solved that problem a little bit, although, like we say, not completely solved yet. But the basic idea of democracy was a good one, because it gave power to ordinary people in a way that had never really existed before in human history, except for very small tribes and villages where people are just so close knit that everyone's just friendly. So that's when your free market works, is when everyone is peaceful and friendly and united, and sort of common sort of public purpose. Then you sort of say, oh yeah, we don't need a government there. But what you're doing is you're just saying, you are the government. All of you people living nicely and peacefully together. You are the government.
Exactly. So that's the point. That's the point I want to get. That's the point I want to get to.
Huge diversity.
Yeah. All right.
Oh, go ahead.
Go finish my point. You're on to my point. So you go ahead, my man. I'll get there.
No, Douglas and I have been talking about this philosophy. We've got it all sorted out.
We do. Yeah.
You just have to listen to us long enough, and you'll find them.
So the point is, this is all coming back to. So I've been having this discussion with Bob Murphy, and I got to get a video out next week to go over with him. But the point is, especially if you're kind of a small government type. I know a ton of people aren't. Charles, I think, kind of leans the Austrian way. But the point is, above all else, I think it needs to be an absolute will of the people to ensure that the government is as wide as possible at all times, right? To have as much inclusion as possible in the say of what our government policy is going to be, right? That needs to be. Now, I'm not saying it needs to be.
Yeah.
Did I say narrow? I mean wide as possible. I don't mean that to the absolute extreme. Actually, I would say there should be some blocks on how wide it gets. I think the voting age of 18 makes sense, maybe 16, maybe even older. You might have to exclude some people from voting depending on certain circumstances. So I'm not saying it's as wide as possible.
It'll differ from country to country.
Exactly. Yeah. So I don't want to say, to any extreme, but, to a certain extreme, there might be something out on the margins where you say no. But I think the thing, kind of the point here is, at this point I've kind of lost the point. To be quite honest, now I'm losing the point. The point, though, when it comes back to the Austrian side, is
all right.
I don't know. Bijou, I lost the point, man. You were on a roll, though. You understood my point. You were making my point.
No, you were good.
I lost the point. And,
no, it's It's like Eugenio.
Here's the thing. Here's the thing. I don't think what the Austrians, particularly that kind of right side, understands is eventually, if you get government too small, you're going to get some group of people together in the government. I mean, I think we've seen this. You're going to get these people together in the government and say, I can do exactly what you want, right? And then there's this vacuum for someone that's very authoritarian to come in, right? And I think that's what we are to a certain extent.
Right,
that is the risk that you end up with, where someone authoritarian enough comes in, right? And once they become authoritarian enough, it doesn't matter how good of an Austrian paradise you have. If they have the weapons and they have the power, it doesn't matter anymore, right? That to me is the risk, and that's why I think the MMT paradigm is so good, right? Because you want as reasonably wide as possible of government. You want some sort of height on the government, but then it's a political decision, right? If you're not getting out of the free market what you want out of the free market, bring the height of the government down, right? If there's too much unemployment, if there's too much suffering, bring the height up a bit, and that is a political decision. I mean, I think that's a big thing that I would press home.
I think it's a big one. Yeah.
One thing I do before.
Yeah, I think that's the big thing with it.
Go for it. Go
ahead.
No, go for it.
Oh yeah, no, I was just going to agree with that. Yeah, you can choose. Yeah, policy choice can be done to adjust things when they need to be adjusted for social equity and so forth. And then one of the philosophical debates, though, is that all governments are incompetent and they don't know how to do that. And probably we can sort of to some extent all agree that that's true. It's like we're not saying that people in government are competent, but they're no more competent or less corrupt than people in private industry. And the stories are in abundance of how the profit motive doesn't discipline private industry. They'll freaking get away with anything they can. They get away with price gouging, stiffing the workers, Elon Musk shit. I mean, to me, it's actually a lot worse because the workers don't get a vote in their workplace. Whereas, at least in a semblance of a democracy like New Zealand, I know Americans is trying to get there, but to keep pushing you guys along, it's a long road to get to actual democracy. I mean, it really pisses me off is that people who say, "Oh, democracy doesn't work." Look, it's like what? So this is not a democracy. So you can't say that things are not working at the moment because of democracy. You do not have a democracy, and it's a long struggle to try and gain a better democracy. Just voting every 4 years is not a democracy.
For the record, we invented democracy, perfected it, defined what it is. That's American.
Oh, maybe the definition. No. Yeah. Okay, we'll give you that.
Okay.
Yeah, people define things well all the time and then don't implement them. That's for sure. So, yeah.
I'm being into it. It's the day after the 4th of July. I'm still feeling very patriotic, baby.
Oh yeah. Yeah. Well, I did congratulate Ryan and Adam on their independence. Imagine if you guys had a king and Boris Johnson as your prime minister and Donald Trump as your governor. What a pretty world that would be.
Yeah.
But back to the free markets and governments. It's like once you realize the natural human dynamics for accumulation of power and so forth, and you realize you get a big enough society where people can fly under the radar of your natural justice or natural reign on criminality, because everyone knows each other. Everyone's nice because they all know each other. Your neighbors. You're in a small village. Once you get beyond that size, you have to start having more socialized sort of systems to reign in unbridled power. And this is not a problem with capitalism. It's a problem with any system where there are not any broad social limits and reins on power. And you could extend that today, because it wasn't a problem in the past, but you could extend that today to use of energy and polluting the environment and climate warming and all that sort of thing. It's also becoming now a social problem that markets cannot fix. So when you understand that, then you realize what the role of government is as a currency and legal monopoly, then you can start to work on getting people just to make better decisions. But if they are running a monopoly system, the currency monopoly, the legal monopoly, but they don't sort of realize they are, and they sort of start to think, we have to get our justice off some a few dozen people at the Supreme Court. We have to get our money off the rich people that we somehow they got our currency.
Yeah.
They got our currency, and we have to get it back
We have
off
to get
them
it back
somehow.
from them. Yeah.
All that
Yeah.
is just going to distort all the decision making that you need. But
Yeah.
if you understand the system better, then you can let a type of free market for relative prices, flourish. And but you can also realize you can tax or fine. I prefer fines rather than taxes. But any sort of bullshit stuff that people are doing, producing just total crap that no one needs, you can gradually realize you don't need that. It's wasteful. It's destroying the planet, and fine the shit out of existence. So there are great things you can do with great power, and as Spider-Man's uncle said, it comes with great responsibility. So don't dismiss your responsibility. You guys are government that are listening, or anyone who wants to be in government, when you get there, you've got the power, but you also have the responsibility. So stop telling us that the free market is responsible for all this and all the Rothschild bankers are all responsible. No, it's a government that has a lot of these powers, but the purpose is to help human beings flourish. And so that's back to the thesis of what height of government and what breadth of government do you want is can be a political decision. And you can adjust that to a certain degree, but also run, if you understand MMT, you can also run automatic stabilizers so that a lot of stuff just in terms of currency systems functions for public purpose rather than private profit. And that, I guess, the last thing that interesting there that came up was I think Adam shared with us. Adam from MMT, Applied MMT podcast, he shared around this interesting little bit of a speech from Noam Chomsky where he talked about libertarianism and conservatism. Chomsky described himself as a libertarian and a conservative in a certain sense, but those words have the exact opposite meaning to what they currently do in the United States. It was quite an interesting talk. But he also brought up the point that Adam Smith had a sort of a good idea about liberation and free markets, but he thought that the reasoning was flawed, that it just didn't work that way in practice. And he doesn't kind of explain it in his talk. I mean, you can find this talk from Chomsky in many places. He sort of says the same thing many times. That he's in favor of traditional values, he's in favor of human freedoms and liberation, but but you want it to be genuine. You don't want it to be freedom to point a gun at someone and tell them what to do. That's freedom for you, but not freedom for me. And so he thought that Adam Smith's basic argument for that was flawed for a sort of certain idealized or platonic sort of libertarianism. But personally himself, he does favor more human freedom, but also democracy, and also he's a little bit of a conservative as well. So that was kind of interesting. But he's using those words in a way that currently have lost all their meaning in American political discourse.
Yeah,
I think.
no kidding.
Almost like they have the opposite meaning, which is a good one. I think that wraps up my thoughts on that for now. Although I'm probably missed a few things. Anything in the chat that you come across?
Chat's going good. They're talking central banks. I like the idea that Schott has with regard to possibly the Fed buying municipal debt, state debt, getting more power to states. I mean, I don't disagree with that. One of the things that's always difficult, by the way, Big Hammer, I don't know if I shouted out yet, welcome. One of the difficulties about getting decentralized power, I mean, I've heard these arguments all the way down to, allowing the blockchain to determine, who has ownership of what. It's really going to be the enforcement of the illegal contracts.
Doesn't work.
Right. I mean,
read Cory Doctorow. People have to trust people ultimately at some level.
Yeah, and that everyone's going to, yeah, exactly.
Read Cory Doctorow shot.
Yeah, that everyone's going to, not Shaw wasn't saying that, was Charles that was saying that. But anyway, I just, at the end of the day, you're going to need someone to enforce. You need institutions to enforce that.
You need institutions.
Yeah.
You can't. There's no such thing as safe, secure software. That's a complete myth. You talk to anyone who really knows how to code and
just for the record, Charles wasn't saying that.
And also,
I mean, that wasn't his argument.
Okay, no, I'm talking to a straw man here. Just creating my own crypto bro guy here that I'm going to attack. Okay, so straw man here, guys. But those crypto guys, they have no freaking clue. They have no clue about society, about computer programming, about hacking, and just talk to Kevin Mitnick, who was that infamous guy that the FBI tracked him down. He wrote up all his stuff. He was banned from using computers when he was in prison.
For like 20 years. It was banned for like 20 years after the fact too.
Dangerous person.
Yeah.
But he's talked. But it's interesting because a lot of what he did was social engineering.
Get
passwords off people socially. Didn't even need a freaking hack a computer, but he could also do a pretty mean hack, and so this whole idea that the blockchain is secure and all that, no, it's just total garbage, absolute garbage. Yeah, I mean, we used for the worst kind of thing to allow black market dealers to sell drugs to kids, and they get away without paying taxes. It's not really even tax avoidance. They actually get hit really badly when crypto crashes, right? They lose like millions and millions upon millions, but they don't care because they're making millions upon millions every day in the black markets. So crypto is just this whole bullshit stuff that's just like, it's the modern Swiss bank account.
Yeah, I think the argument, to be fair to the argument that at least I've heard in terms of kind of using the blockchain to decentralize, just to decentralize.
Well, decentralized ledgers and all that is not crypto, right?
Yeah, the blockchain, I guess, whatever you want to call it. I think to me the bigger point is, at the end of the day, if you have some claim of ownership to something, you need someone to enforce that, right? You need some sort of legal establishment to enforce that, and then you're going to need ultimately some sort of law enforcement to enforce that, right? And you can claim you own a plot of land in Afghanistan all you want, because it's on the blockchain, it's on some sort of distributed ledger blockchain. But good luck, good luck getting it. I'll never forget the guy who created. Was it Solaris? I forget the name of one of the many crypto busts, but that was his argument on a TED talk. He's like, oh look, you could keep the legal, the legal rights to things on the blockchain, and everyone has this. I mean, who the hell cares? Right? Once
exactly.
Once a warlord takes over,
you go up to some Afghan warlord and wave your Bitcoin at him.
Yeah, wave the distributed ledger. No, I mean, at the end of the day, that's, I guess, to me, those are the institutions that seem to be undermined most kind of the current political current political situation. Couple things on the way out here, guys. This is going to have to be a short one. The office here at this house is in the same room that my children are going to sleep in. A couple of them will sleep in here. So I'm going to have to get out so they can get to bed. But
right.
we can go for a little longer. We can go for a little longer. Make sure we get everything in.
Charles, Bitcoin has been hacked many times. Also, the FBI and the NSA have hacked Bitcoin and crypto. You know, they don't need to decrypt the ledger. They just look at social data and they can find who is buying what. So, if the state wants to shut down Bitcoin, they can shut it down. But it gets hacked. Look up Kevin Mitnick and what is it called? Social engineering or whatever, you know, and check your WhatsApp or your whatever favored text messages you use, because there's going to be someone on there eventually asking you to buy into some crypto scheme, and you and I probably are not going to fall for those scams, but a whole lot of people do. So try to stop thinking about yourself and
Charles,
individually. Think about society. Think about everyone else that gets harmed by this stuff, not just you, because you're smart. You're going to use crypto in a sensible way to, you know, invest and trade. You know, that's fine for you, but everyone else in society, people get scammed by this. They get the promise and allure of this fast money. You know, what real production is backing a Bitcoin? Nothing, right? So it's just a complete sort of Ponzi scam. It's not backed by any real production. And okay, it's good for someone who knows how to game the system and trade, but think about the effects on everyone else in society and people who get scammed by it. You know, they're losing their life savings. It may only be $2,000 or $3,000, but you know, they're the people that I worry about, not the millionaires who are trading Bitcoin and making obscene profits off it, who then, you know, lose $30,000 in a single day. They couldn't care less about it. You got to think about what real production is backing your currency or your token or whatever IOU you've got, and then just go back and read Cory Doctorow, and I think you'll open your eyes up to the whole.
So I want to jump in here. I want to jump in here before this fades away. Charles, you brought up that much of the world's GDP will be digital assets into the future, right? And I actually think that we have a great example already of how to properly manage this world, and that is that the largest, I would have to think, the largest in terms of overall value of digital assets in the world is in the CSGO skins market. I mean, we're talking hundreds of millions, if not into the billions of dollars worth of skins in that market. And that is
digital assets are not real assets.
Let me finish this point. That is the largest market of digital assets at this point. There might be other places that have larger purely digital assets like that. And it's ran by one company that's incredibly private, but it is thoroughly trusted, right? I mean, if the point is that we're going to get to a digital asset, if we're going to get to some sort of digital asset platform globally, and digital assets are going to be important for people, then I would say the Valve playbook is the playbook that's going to win out, and that is a company that doesn't tell you anything it's going to do and kind of rules with an iron fist, and it's very trusted.
Not backed by any.
And it's very.
They're not promising to redeem anything.
Yeah, and the point is it's very trusted. I mean, people put millions and millions of dollars onto these accounts for these digital assets, and it's thoroughly trusted because of that. As opposed to, and it has. I mean, it's as far away from a distributed ledger, crypto style setup as you can possibly get. But I guess that'd be my kind of thought is when you actually look at it. I think Valve and the way that the skins market they do is operated, it's the complete opposite of what the crypto crew would say, and it's large, it's secure, and it's very centralized, not decentralized. Couple things before we wrap up, though, to get off the
it's not
crypto.
A currency. Yeah, it's not a. But Yeah,
We
it's
got
not an IOU, so it's not a currency.
yeah. That's I mean,
Just wake
that's
up,
that's that's
learn
the
some
other
things.
yeah. That's kind of basic
And it's like
monetarism 101.
it is based on trust, but the trust only goes so far, right? So it can all break down and go away overnight. And so you got to distinguish the difference between Bitcoin, which is not a scam, the way Bitcoin is used, which is a scam, and the ledger, which is not a scam. It's okay software as far as it goes. It can easily be hacked if someone wants to. And the problem of trust, which always comes back down to human social relations. I mean, why do you guys trust your software if you're using Microsoft or Apple, operating systems? I would not trust that at all. Full of spyware, malware, and all sorts of stuff.
I don't know. I've heard Bill Gates is a good guy, an upstanding citizen.
Good guy. Trust him. Oh yeah, okay. Let's vote on it. So you got to be not too naive. I know all the arguments about Bitcoin and how it's going to liberate people, but it's not, because it's not an IOU of anyone. No one's promising to redeem Bitcoin for anyone. The price of Bitcoin, which is evaluated in some fiat currency, often US dollars, doesn't have to be. I could price Bitcoin in New Zealand dollars just with the conversion. It could go to zero overnight. Whereas the US dollar, New Zealand dollar, it's not going to go to zero overnight unless our entire government and tax collection system collapses. So, you have to have a little bit of understanding of real politics to understand these things, and to not be so naive and in this little bubble of libertarian sort of crypto paradise.
It's
just not going to work.
It's kind of funny. Charles says
you can't tell me that Bitcoin starts off. You can't tell me the Bitcoin starts off at what is it? Whatever it was, $1 US per Bitcoin, and then goes up to $30,000 US per Bitcoin, and tell me what actually real production has backed that. What real production actually backs that.
It made the GPUs go through the roof in price. That's one thing it did.
Your trust has gone through the roof?
No, the GPUs.
Suddenly now trust someone 30,000 times more than you trust your GPU. Yeah.
Zero shot coming in, right? It is not currency or money. I mean I see. I can't call Bitcoin money. I can't call Bitcoin even a currency. To me, Bitcoin is no different than gold at that point. There's nothing. You are just buying.
Yes,
it is.
But it's worse than gold because you can't make electronic things with it.
I mean, it's. If someone
and also
when
you say GDP is going to be all digital, when you say GDP is all digital stuff, well, our fiat currency already is digital.
Exactly.
What are you talking about?
Exactly.
GDP is measured like in currency units, like you measure chicken or avocados in kilograms. So the real stuff is not the kilogram. The kilogram is a standard defined by the International Bureau of Weights and Measures in Paris, and you can't eat a kilogram, but you can eat a chicken or an avocado. So the way GDP gets measured, the numeraire is irrelevant. It's whatever it is. You can measure GDP in whatever units you like.
I think he's saying less of GDP. I think what he's trying to say is that less and less of GDP is going to be about physical assets swapping hands, and more about digital assets swapping hands.
Yeah, but that's wrong. That's poor language framing. That's bad politics.
I'm not saying that, Bijou. I'm saying that's what he's saying.
Yeah, I know you're not.
Okay.
I know you're being the devil's advocate here.
Yeah.
Okay, so yeah. Yeah, for sure.
All right, listen. We have to get off. No, hold on. Time out. We gotta get off. We gotta get off crypto. We gotta wrap this up.
Okay.
I've got about 15 minutes left. No, whatever. No. It's more just we've spent enough energy on something that doesn't matter. Sorry, Charles. Crypto's not going to matter when it's all said and done. That's why I love you. Sure, I love you. You can you continue to try and convince me, but I'm going to remain unconvinced. Hey Zeus too. Welcome, man. One of the things Eugenio, like an hour ago, put something up about margin debt accelerating. Isn't that going to continue to cause the Fed to hike interest rates? And I think that's it, right? I mean, I think it's a spectacular thing that we might end up seeing. I'm starting to think we might start seeing inflation surprise to the upside. Now, that's not to say just to be clear, CPI should still keep coming down. But what I would expect to happen is consensus, right? I mean, let's say CPI is at, supposed to be at 4, consensus is at, 4%, and it ends up being at 4.2%, right? So my point is, I think we're going to start to see some surprises to the upside in inflation as measured by CPI. And if we start seeing that, right, because the point, I mean, people are pretty good, right? The market's pretty good at anticipating where inflation should be at, right? But the point is not can they get the measurement right before it actually hits the tape. It's what do they come up with as consensus, and then what's it starting to surprise consensus? So I do think we're going to start to see a surprise to the upside, and then that can really start the cycle pushing higher. And we'll start to see that when things like debt starts really accelerating. Obviously, we'll see that if and when oil finally takes off. I didn't get a chance to see where oil ended today. But when we start seeing that sort of thing finally take off, then we will really start to see the inflationary crunch. But yes, I do think the Fed's going to start to, they're going to continue. I mean, they're going to continue to see the signals that they need to hike rates. And to be honest, if you would have asked me, and I think I have a video up on TLT from like 3-4 years ago, might have been around pandemic time. I didn't think the Fed would ever actually go through with this. I will admit the one thing I am without a doubt wrong on here. I didn't think the Fed had what it took to actually go through a rate hike cycle like this and go full Volcker. But it looks like that's what they're doing. So yeah, I do think if we're going to continue to see acceleration happen, certainly one of the things on the credit side and margin debt, I mean, they won't officially say it, but they look at equity prices. It's something that they put in the in the final determination.
Yeah.
Go ahead, Bijou.
Dude. Yeah. That was something that Nick Gomez mentioned back in the chat. I wondered if you had a response, because he reckoned that margin debt relative to equity valuation wasn't actually going that high. So does that mean there's actually still more space?
Yeah, that's it. Yeah, I mean that's it. Someone pointed this out when I pointed the acceleration. One of my reply guys was like, "Well, no, it's not going up at all." And I'm like, "No, you got to worry about acceleration, because it's the acceleration that you see change before the actual change happens, right? I mean that's when right. I mean it has to accelerate first before the velocity can really get going, and that's my point is that we have a lot of space to run, right? We had a washout from the bank side as well, but yet, fiscal continues to pump because the Fed never took the rates down. And I mean, that's, anyway, those are my thoughts. I'm seeing the thing here. Any thoughts on market activity today? Mike Norman said a video just before, and he chalks it all up to people getting spooked. We were driving. I was driving all today. To make it up, I didn't think markets were down all that much. Where did we end up? I'm looking it up on my phone right now. We'll go SPY while I keep talking. I see us down today barely any. I see us down a 0.1%. So did we have was there anything more than that today? Did I miss something? Or are you talking something else, Josh?
Not sure.
Okay. Maybe it was oil or something like that. But
well, I think we need someone on live to chat about it. I haven't been following it this week.
The markets, no, they've been great. I mean, actually, markets last week re-accelerated. I mean, we hit fresh highs for the year, the whole bit. So, I mean, the markets have been looking good. I didn't see a major sell-off. The next thing to keep an eye out too, like I said, a few things really clicked while I was making, preparing that video response to Bob Murphy with interest rates and why the yield curve inversion isn't going to call for a recession this time, and why the yield curve inversion. The one thing that I'll give Bob Murphy is he is right that a lot of people chalk the yield curve inversion up to just the market anticipating recession, but yet I really his point to that kind of counterpoint that like an MMT would bring up is that, well, the signal had existed well before anyone realized it, right? Before it became kind of commonplace. So you can't say that it's the market realizing this so they act a certain way, because it happened a few times before anyone realized it. So there's something happening. And to give you kind of I plan on going over every piece of it, because there are so many things that people get wrong about the interest rate thing, and the way the Fed gets it backwards, the way that it transmits, that they get that kind of backwards, how it transmits through the actual macro economy. And I mean, I really think what's happening with the yield curve inversion is, again, it's just that interplay between the fiscal cycle and the bank cycle, right? So you get this interplay between the fiscal and the bank, And there's always
Okay.
been this cyclical cycle, right? And the Fed, as it turns out, I think, is very sensitive to the banking cycle, right? For whatever reason, whatever they're looking at is when the
Yeah.
endogenous cycle starts kicking up. That is really what is pushing. That is really what is pushing unemployment lower. That's really what is pushing growth to accelerate. That is really what is, for whatever reason, the measures they have, right? You might even see a tick up from inflation, expectations when the credit cycle really starts to take off. And that's also when the fiscal side begins to falter. So they start to hike rates quite rapidly into that cycle. But usually what ends up happening is that cycle is separate from the fiscal cycle, right? And that cycle falls off, and they see the slowdown of that fall off as the signal to lower rates. And that is actually, and when you look at this, when you actually look at the yield curve, it's not the inversion that ever causes, if you will, it's not the inversion that causes the recession. It's coming out of the reversion. I think I can share this chart. This is, I don't have my normal.
Yeah, I think I agree there.
I don't have. Let's see. Yeah, here we go. Hopefully this comes out all right, guys. Normally I have 4 screens. I have 2 right now, so bear with me here. But as you can see, hopefully this is coming through. I think it is. But as you can see, before the 90 recession, it's coming out, right? It says the Fed is starting to lower interest rates, that it's getting the signal that causes the runaway inflation. Again, 2000, same thing. They're coming out of the inversion. It's coming out of the inversion, right? Because they're starting to read the signals to lower. And it's when they lower, this is the key. It's when they lower the interest rate that actually kind of begins to prick the bubble. And there's a few reasons for this. Number one, they're just starting to pull away the additional interest income to the private sector. That's key. Number two is that the accelerating or the pushing higher of that term structure prices, that gets flattened out. The kicker here is there is a very strong correlation between the turnover, the velocity of money, and where the interest rate is at. I think it has something to do with the term structure prices. I mean, the whole thing, right? Term structure prices, velocity. The velocity flattens out, and it's the velocity that's the kicker, right? I mean, that's one of the insights that Ty and Steve Keen brings, right? You slow down the turnover of money in the system, that begins to cause a contraction as growth as well. And then that feeds on itself. The Fed immediately drops rates to zero, right? They might just start pulling rates down. No, they drop it to zero. That only perpetuates all the problems that we've seen. That creates
pro-cyclical.
Yes. So that creates the very quick contraction, right? That takes all the air out of the system. It implodes. Employment goes sky high, and then unemployment goes sky high, and then at that point, that's when you end up getting the fiscal side to kick back in, the automatic stabilizers kick back in. The president's like, oh crap, I got to spend now. You get the spending to kick in, and then you're back off to the races. That recapitalizes the banks. You can get the whole thing. But it's the Fed. Ironically, the favorite part about this is that the Austrians have it 180%, 180 degrees wrong, right? It's not that the zero rate. It's not that the zero rate is creating some sort of false signal to the market. It's hiking the rates that are creating the false signal to the market, and then it's bringing it back down to zero without offsetting fiscal. Which again they get wrong, right? They think the fiscal is the distortion. No, it's a vacuum of both avenues of demand that you've just created, and you get a collapse. So I mean, part of me is kind of tickled pink that the Austrians have it backwards out of both cannons, if you will. So that's a little bit of a that's a little bit of a preview for my response to Bob Murphy. But so many things, good. From the MMT side, right? When I look at the data and I'm trying to determine, where the hell markets are going, I've never once looked at the yield curve. I don't care, because I know it's set by the yield curve. Across the curve is just the expectation of where traders and investors think that the Fed is going to put rates. So there's no, I know mechanically that it's the king that's abdicated its power and is but yet still in control. So it's just sticking his finger up in the air to see which way the wind's blowing and deciding what they're going to do. It's completely backwards. And so the yield curve
exactly.
inversion means absolutely nothing. So I've never looked at it, and I've never really thought about it, but it's really important to a lot of people. I get that, and it's like, no, I think this is the absolute answer. I think it inverts, and that's why we're. Go ahead.
Yeah.
Yeah, I think
I think just to emphasize your point there, which is really good, is all these receipts that you're putting out are great, but it's like we know Japan, the Japanese government can control the yield curve. The Japanese central bank can control the yield curve how they like. Yeah. So it comes back to policy choices, and if you don't think you control the yield curve, the narrative will be different, and the outcomes will be different, right? So it's just like you say. And it's great that you're putting out all these receipts. You should do like a speech to text conversion and sort of write this all up, like we.
Yeah.
Because do people come back and listen to these live streams to say, oh yeah, Douglas was saying this 6 months ago.
No, don't worry, I do. I mean,
we've got to get some written records of these.
I know. I mean, I do, and I'll post them, and I will find. There was that one guy, Purr, whatever his name is. The dude never made a call. I mean, he wouldn't even get on, weather.com, and if it said it was 100% it was going to rain, then he'd even say it would rain, right? He'd do something stupid like, well, what is rain if it is not wet? Whatever nonsense. This guy wouldn't make a call, well, I don't know if the sun will actually come up tomorrow, but we must first define what the sun is and how to determine if it is sunny or not.
Right.
So he's doing that. But I found, this is great. So I actually went to one of his live streams, and he had this guy. This is great. Someone super chatted him. So, he was compelled to actually answer the question. And the question was, are we going to get a recession? Is it going to be worse? And he's like, yes, we're going to get a recession, and it's going to be bad. So I clip out that part, right?
Wow.
But you know what he said right after?
Clip that one.
I did, but you know what he said right after? He's like, but I don't know if it's going to happen today or if it's going to happen in 2030. Like, what the hell? What point then is your economic model if you can't tell me within, and at this point, I think this is late 2022, if you can't, within 8 years.
That's a nasty hedge.
8 years, if you can't have a model make some prediction within 8 years, what are you doing? What are you doing? Oh my God. So anyway, I was, but I clipped it out. I called him out. I remember when I say everything, I can come back to it. And I have no problem admitting I was wrong. I didn't think the Fed would go through with it, but they are. But what I'm definitely not wrong about, I mean, that was obviously me just not understanding that the Fed was actually serious about what they thought. But what I'm definitely not wrong about is understanding how the macroeconomy works, and if the Fed does decide to raise interest rates and continue to raise it, where they're going to go. But anyway, that video is going to be out probably early next week sometime. I have done a lot of research. I wasted a lot of time on it, but I think it's worthwhile. I think it's worthwhile because Bob's willing to engage, and he's a good guy for that. So we're going to continue to do that. Anyway, I told my wife I would be done at 9:30. So, Bijou, if you have anything else, man, go ahead, guys. I know chat. Actually, Roger.
Yeah, and just bookmark what Roger.
Yeah, Roger
had a good question.
Yeah. I actually do think even under 50%, you could get an acceleration.
That's right.
It doesn't have to be.
Yes.
But certainly the higher the debt to GDP ratio, the public debt to GDP ratio, the more potent higher interest rates are going to be, and just the more risk you're at. Especially here's the other thing too. If you have a very low debt to GDP level, and if you're doing any sort of anything where you're not taking kind of full monetary sovereign control over your debt to GDP, right, or just over your currency, that increases risk. And then especially if you're particularly sensitive, like countries like Australia are to commodities, and then you're also very reliant on the endogenous side. You do set up a little bit more of a recipe for disaster than something like a U.S. would. But Bijou, give your thoughts there too.
Yeah. No, I think I'd agree with that. It can depend on the structure of your economy, how that effect works. But I'd still say rate hikes are still going to be pro-inflationary. It's just not a one side story for all countries, right? So the rate hike's still going to be inflationary, even if you've got low debt to GDP, just because of the term structure of prices. But you're not getting the fiscal dominance in that regime because your bond issue is so low. So the rentiers are not getting getting fat out of it, and so trickle down effects that Douglas, Ryan, they can all go through to you. We don't probably have time to do it tonight, but you see, you just from, even if you've got high debt to GDP ratio, I mean, I'm ignoring Ty's point about the stocks and the flows. It doesn't matter because you still get a number out of it. You just have to take into account the time element. But so GDP is a rate, is a flow, per year, and the debt is outstanding. So really, what you should look at is just the bond issuance that the government's prepared to issue, and that's the free income. But you got to look at it, the trickle down effects of what actually puts that money back into the real economy. So it's how that happens is also going to be determined in how rapid the inflation goes. But I still think it's pro-inflationary bias. But it could be so small that you're not going to notice it, and there are going to be other effects that slow down your inflation. But never hardly ever goes negative. Never goes negative.
Until the system
you could
crashes.
do negative rates or massive taxes and then cause some deflation that way.
Yeah, exactly. Yeah, that's one way to maybe
negative
get what
rates
you're looking for.
Tax.
All right, guys, we're gonna have a ton. We're gonna have fun next week.
I agree with you on that.
One of the things I pieced together, and we'll go ahead and plug the Patreon. I have one of the new deep learning models. The patrons know this as well. Updated deep learning model. I had a purely we'll call it kind of like an S&P fair value. I've now been able to extend that out to kind of a 24-week prediction. The model's looking great. I'm excited to continue to grow that. That's all over there at patreon.com/MMT macro trader. Again, that's if you're a trader, investor, you can get access to that. If those tools would be helpful to you, and you want to come along for the ride. We have been crushing it. I mean, I saw this great tweet earlier today. I don't have it ready to pull up, but this is what everyone was saying as we were heading into 2023, and at this point, this is definitely what would take place. That excess federal spending is going to crowd out private capital, choking innovation, new company formation. The cost of U.S. borrowing will skyrocket, making debt impossible to manage. The U.S. dollar is going to be devastated and will be radically devalued. All of this will cause rampant inflation, spike prices to levels not seen before, and deficits will drag down the overall economy. That was the horror story as we were heading into 2023. And so far, none of that has played out. It is the complete opposite. So I'm saying this from the financial economy side, not so much from the real economy side. We understand that this has been very regressive. This has been, just about as bad as you can, make this policy play. But with that being said, the only people, there are only a few of us, myself, Applied MMT, Nick Gomez, Warren Mosler. I can't think of any other names. We were the only ones that were saying, no. You have it all backwards. And listen.
This joke is going to go on for a while.
Yeah, it's going to go on. But in all seriousness, guys, we're doing good stuff. We're having fun over at the MMT Macro Trader. You also get a much more subdued, focused Douglas while you're over there as well. If you're wondering if I have this energy during the updates, I really don't. You get much more down to business, but we do have some fun stuff. I will definitely show you next week some of those models that we're working on. They fine-tune them. They are really narrowing in well, and they're coming out well. And then on top of that, we have everything else we've created over the years and absolutely crushing it. So again, one last plug, patreon.com/MMT macro trader. With that being said, I'm gonna hand it off to Bijou, guys. Thanks for joining us. While I was on the road, we would like to come up to throughout the summer. It's so nice to be up here, and we own the place, so we'd like to come up here more and more, and maybe even make a week-long thing. So if this worked out well for everyone, let me know. Let me know down in the comment section below after this is over. I'm gonna have to re-listen to it, make sure the audio was well. Maybe I'll get some equipment to do it full time down here, or up here I should say, as well. So if this worked out well, we can keep doing this, but we're gonna keep it a short one. Bijou, I'm gonna let you take it away if you've got your outro. But thanks everyone for joining tonight.
Oh yeah, sure.
Go for it, Bijou.
Oh yeah, sure, man.
Go for it. Oh, man.
I'll have to look at. It's been fine on the Google Meet, but I'll check the YouTube later.
Okay.
Well, okay. Well, last week we had the introduction to the macroeconomics conference on economic piping, and today we'll have the second week of the conference. Had a very long week break of the conference there. So today, another keynote speech from Dr. Arthur McMoneyfinger Stockchester. Arthur, take it away. Oh, well, thank you, Bijou. Esteemed attendees, illustrious academics, and cherished comrades of the economic piping fraternity, I am overwhelmed with honor to inaugurate this momentous conference focused on the intricate mechanisms of macroeconomic poverty induction processes from Hayekian gyration dynamos. In this convoluted landscape of tangible, fungibles, monetary slip sinkers, and paradoxical reavers, the overhanging interest burden blasters, we find ourselves grappling with the effects of plain junket von Mises cam joints and on the transient but increasingly important phenomenon of Hayekian gyrations. It's a labyrinthine tangle, one could say, mirroring a kind of economic Sonnenschein mantle de bro knob winder. In conclusion, as we navigate the solo thumbnail rule, implications for rentier affluent auric encrustification, we have to, it is my strong belief, forever pay heed to the Draghi-Lagarde principle of supply-generating unit wage-earning numerical crypto reciprocity, which is to say, never bend at the chance to issue policy prosperosifications in aid of the universal basic barley grain surpluses for the maximal bank instrument account holder class. And let it not be forgotten, they are the ones sponsoring this conference. So, go forth and bootlick the sponsors, my friends. There is no greater calling in the discipline of Hayekian poverty induction processes. Next week, more of the same from the Economic Piping Conference. Thank you all for tonight. Enjoy your week. Same MMT time again next week, same MMT channel. Bye for now.
Hayekian gyrations. Have a good night, everybody. See you next week.